that helps you target opportunities across large, mid and small cap companies, guided by our in-house market cap model. Mutual fund investments are subject to market risks. Read all scheme related documents carefully.
बस अब शांति के साथ रहना चाहता हूँ। शांति।
इस प्लॉट में ट्विस्ट है, इस प्लॉट में नहीं। 99acres.com दे सबसे ज्यादा वेरीफाइड प्रॉपर्टीज।
Welcome back. You're watching Buy Now, Sell Now on ET Now, and time for the viewer queries. And just before we kickstart the viewer queries, we'd like to let all of viewers know that we will like to stick to just one query per person, one stock per person, since we want to accommodate as many queries as possible. So let's get going. Let's start with the first query, and this one is coming in from KR Balan, and he's saying that he intends to buy 500 shares of Manali Petro or SPIC at current levels for short-term trading. He wants the advice on that. Kunal, either Manali Petro or SPIC, which one makes sense for Mr. Balan to buy? 500 is the quantity that he wants to buy for short-term trading.
So I think Spice, the SPIC is something what you can look at current levels. I think the stock has confirmed a breakout. If I'm not wrong, it's trading at closer to 53 odd levels, 53 and a half levels. I think that looks attractive. The stock is confirming a longer term breakout, and I think from that sense, you can look at a position target of at least another 15 to 20% on the upside. So closer to 58 and 62 kind of a range is where I would suggest you can look out for booking out profits, specifically if it's a short term oriented trade.
Okay, I'm hoping that you have a view on this, Kunal. This is from Mayank, and he's holding 3,000 shares of Nesco at levels of 575. The stock is absolutely on fire today. He's looking for a view for the next 1 to 2 years, though. What would you tell him?
So yes, the stock is on an absolute tear. It's been doing pretty well, Alex, for last 3 months. If I'm not wrong, the stock has been rallying up from 455 or 465 to current levels of 665. So it's been on a strong footing the last 3 months. And today's move is more like an icing on the cake, where you're seeing the stock breaking out of a multi-year resistance, multi-year breakout point as well. So looks quite attractive, and I think if you bought at lower levels, I would suggest that you can hold on to the trade, because if this multi-month uptrend is something to go by, then you might see the stock even scaling past about that 700 mark pretty soon. So I would suggest a hold and look out for higher targets closer to 700 plus.
This one is coming in from Babatosh Mohanty, saying please share your views on Balrampur Chini at current levels for the longer term. Saurabh, what's your view coming in on Balrampur Chini for the longer term? How does this sugar stock look like, and should Babatosh look to actually buy at current levels?
All the sugar companies have changed given the demand supply current scenario and the large production of the sugarcane moving towards the blending of ethanol, and ethanol story coming into the picture has even made things better for these companies. The realization is also likely to improve in the coming quarters. So I expect that the stocks in the sugar basket will continue to perform. I would suggest a hold on the stock.
I'm actually not sure which stock. There are two Moltech companies. One is Moltech Technologies and one is Moltech Packaging, right, Saurabh? So Prasanta is asking about Moltech and he's asking for a fundamental view. He's put this in. He's put plastic in brackets. So I'm not really sure which one he means. Would you suggest a fresh entry though?
I think packaging companies are doing quite well, but the problem lies how far whether the raw material cost will impact these companies because of the higher food prices. Because largely at times plastic the packaging companies just get impacted because of the higher, raw material cost because of the inching up of the crude prices. So I think Moltech packaging may not be that strong in the arena. I would recommend if you want to invest in the packaging, I would rather recommend EPL in this space.
Okay, this one is coming in from Satish saying that he has Maruti Suzuki shares which he's purchased at 5,000 rupees per share. He wants to know whether he should go ahead and switch this holding in Maruti to Dmart or L&T Infotech. Kunal, does it make sense to sell the current holding in Maruti Suzuki and look to enter Dmart or L&T Infotech?
Well, I would suggest an absolute no. You should not look to switch out from such a cream stock like Maruti towards other names which have already been performers. So yes, Maruti has been an underperformer, but like every bull market, there is a sector, there is a stock rotation which keeps on happening, and the underperformers, and specifically the ones which have been historically money spinners on the long term basis, they tend to make a strong comeback. So I think if that's the case, Maruti should make a comeback sooner than later. In fact, on the charts, in fact today on the chart busters as well, I discussed the prospects for Maruti on the longer term basis, that how it's forming a classical inverse head and shoulder pattern on the long term charts over the span of the last 2.5-3 years. And if the breakout fructifies for Maruti, we could be looking at least a 3,000 to 3,500 point breakout on Maruti from current levels. So that's more of a longer term basis. But since you've already bought at much lower levels, I would not suggest to switch. In fact, I would suggest that you should try and use any kind of a short-term correction to try and average out further, and then hold on to it for at least the next 1 to 2 years. I would probably expect even a target of 10,000 plus on Maruti over that kind of a time span.
Wow, that's a significant statement to make, Kunal, and clearly it's something to watch out for. It's come down from that level and since then been unable to reclaim that. I want to come to you, Saurabh, just to get a clarification. You said Moltech packaging, you had an alternative which you suggested. I didn't quite catch the name. What was it?
EPL, SL Pro Pack, EPL Limited.
Okay, understood.
SL Pro Pack.
Understood. Okay. The next question is also for you, Saurabh, and this is, yes, I got it. The next question is also for you, and this one's on Nalco. Satyanarayan wants to know the long-term targets that you have for this counter. He's holding 100 shares at 80. And a lot has been said about the international prospects for aluminium and, of course, copper. But specifically on Nalco, do you think it makes sense to hold for the long term?
All the sense to hold on the Nalco, because the aluminium, the prices have risen a lot, and these companies would stand to benefit. They would make a profit in a single year, which they don't have made in the last many years. I mean, it could change the balance sheet dramatically, and the usage of aluminium is expected to increase because of the new technology coming in. The automobile companies are using more aluminium to make their vehicles lighter and all. So I expect, even if there is some news that there are some corrections going in the commodity prices like steel, aluminium, because China is releasing some inventory. Then also I would recommend the prices are far higher and these companies would continue to make a good amount of money. I would recommend a hold on.
Okay, this one is coming from Bharat. He's saying that he has HCL Tech in his portfolio and he wants to add more at current price for the longer term. He wants the view on the same. Kunal, does it make sense to add HCL Tech at current market price for longer term? Bharat already has some of HCL Tech in his portfolio.
Well, then why not diversify and probably look at maybe adding some other large cap quality names from the IT pack. One of the stocks which I've been advocating quite consistently over the last 12-13 months has been Wipro. I think from the time the stock had broken past about that 255-300 hurdle, it has started a new bull market for itself. More importantly, I think when you try and look at the price performance from the large cap IT names, there are two stocks which are standing out very strongly, and that's Infosys and Wipro from the large cap IT space. So HCL Tech apparently has been a slight underperformer. So the previous high, for example, for HCL Tech was around 1,050, 1,060 levels, and the stock is still trading 7-8% lower from those levels as compared to the other stocks like Infio and Wipro, which are trading above their major swing highs. So that itself is a standout feature for outperformance. I would suggest that if you want to hold on to IT names, diversify and add Wipro to your portfolio.
Okay, I'm not actually able to find the corporate announcement that talks about this, but I'm just going to take it as it is. Saurabh, coming to you on this one, Swayam is asking about Supreme Petro bought at levels of 785. He's talking about the fact that the company has reduced its face value of its shares from 10 to 4, and that's probably on the basis of a share split, which I haven't read about. On the fundamentals, though, what do you think about this investment? Should he hold on to Supreme Petro?
The corporate action must have been misunderstood by the investor. On the fundamental side, I think the company is quite okay. He can hold on to the stock. And with respect to the stock split, I guess the company may go for a stock split from face value of 10 to 5 or either 2. I mean, that means it will convert into 2 share or 5 shares. 10 to 4, I don't think so. It makes it will create a fraction for the subdivision of shares.
Right, this one is coming from Divya. She's saying she bought Navneet at a price of 88.5 rupees per share, wants to hold it for the next 3 to 4 years, wants to add more in SIP mode. Please advise for the same, Saurabh. Navneet, what's your view on this? Makes sense to add more in the SIP mode for the next 3 to 4 years?
I think because of this pandemic, children are not going to, school, which is actually weighing on the companies like Navneet. I mean, the use of stationery, use of books, and the articles which students regularly purchase has gone down. And Navneet has not done wonders since last many years. It is a good brand name, but I think something should come in the P&L also to make stock attractive. I would rather recommend avoid on it.
Okay. Parth has got a question, Kunal, on Varun Beverages, which he's holding at levels of 806. 75 shares he's got. Stock is currently at 724. He's asking we should book losses or should he hold on at this juncture?
Well, I would suggest hold on for some more time. It's a stock which is going through a retracement process. Now, there are two possibilities over here, of course. One of them is that the stock can hold on to its 50-day moving average and the uptrend can begin very soon. But the other prospect would be that if the stock manages to break down sharply below the 50-day moving average, then there is a possibility of much more sharper reversal on the downside. So, I would suggest that maybe hold on for some more time. Let's wait out for the stock to try and take support at the 700 mark. That seems to be a very strong support, at least as of now. And if the stock manages to hold on to that support, there is a possibility that it can make a small rally from current levels, maybe come back towards 755, 775 kind of a target range. So I would suggest a wait and keep a hold till the time the stock is trading about that 700 mark.
All right, this one is coming in from Muthupalani, saying that what's the view on City Union Bank? I have 200 shares, which is bought at an average price of 171.1 rupees per share. He's planning to hold for the next 2 to 3 years. Saurabh, what's your view coming in on City Union Bank? Mr. Muthu wants to know what's the prospect going ahead. He wants to hold it for the next 2 to 3 years.
I think it is a good small size bank. I mean, the balance sheet is okay. The NPA levels are comfortable, but I would still prefer to invest in some private bank or a PSU bank like SBI or ICICI. I would rather recommend him to switch his investments to ICICI or SBI.
Fair enough. IndiaMart Intermesh is the stock that we're talking about next, trading at 7,240. Not too much changed in trade today. We've got we've got AB Ajay, who's holding on at, or rather he's bought at the current market price with a 3-month horizon. Coming to you on this one, Kunal, what do you see on the charts?
I think it's a longer term stock as such. In fact, long term wise, the stock has done absolutely wonderful from the last 13-14 months as well. From those March 2020 lows, the stock has done phenomenally well. and now I think it's taking its own bit of a consolidation. So I think rather than getting fret with the consolidation, you should try and take opportunity of it. In fact, the stock in the last 1 month as well has been holding on above its 200-day moving average. So I think that's a good enough support level from a longer term basis. And generally these mean reversions towards long term averages, they try and complete the correction which generally is impending into stock prices when they see such a stupendous rally in a short span of time. So I think I would suggest that you should hold on to your investments over here. And in fact, if the stock say comes back to that 7,000, 7,100 mark, which could be just about touching its 200 moving average, take that as an opportunity to average further.
Is coming from Shanmuga Sundaram, 100 shares of CESC that he has, that is purchased at 765 rupees per share. Wants to know, can we continue to hold on to CESC for the next 6 months? Kunal, what's your take?
Well, I would probably suggest that give it some more time, because maybe the stock could take some resistance over there. The chart history for CESC is still a bit iffy, because on short-term scale, the stock is confirming a breakout. But the worry for the stock is on the monthly charts, and from the 2017 highs when CESC was around 885, 900 rupees. From there on, there is a longer-term resistance trend line, and the stock has hit back towards that long-term resistance trend line. So short-term wise, you might see a trading pop into these kind of names, but long-term structure still needs to get a lot of confirmation. So I would suggest that keep it more short-term oriented and let the stock break out of this long-term resistance trend line. If that happens, then we could be talking of much higher targets on the long-term basis for CESC.
Okay, we spoke about this stock in the first segment of Buy Now Sell Now before we started the live on social media. SpiceJet, it's trading at 80 rupees, 1.7% higher. We've got a question coming from Akash Raj, and he's holding 700 shares of this company at 70 rupees is his acquisition price. He's looking to hold for the long term though. So sort of prospects for SpiceJet. Would you bet on SpiceJet or Interglobe for the longer term?
I think these companies will take a long time to get things. Things will get better for these companies. I expect that the things will change probably in 2022, and the things and right now to make things work, I think because of the rise in the crude prices, the ATF prices will also go up, which will add to their boost only. I mean, the capacity is still underutilized, and I don't expect that the travel into the aviation sector will scale to their previous heights anytime soon. So I would rather avoid this sector.
This one is coming in from Abhishek Ray. Sorry, Abhishek, we could not take your query yesterday, but today it's on Central Bank. He wants to know, what's the long-term view coming in on Central Bank? Saurabh, what's your take?
Probably it is one of the candidates which can go for the privatization. If that happens to be the case, I think the re-rating is on the cards. I think IOB and Central Bank, these two names are coined in the media because of the privatization which is going to happen. On the balance sheet side, I think it is okay types bank. I mean, it's a small size. And if you want to really invest in the banking space, I would stick to the large names like ICICI and SBI.
Okay, I believe that earlier in the program, Kunal spoke about Wipro, and he had said that it's a good buy at this juncture, if I'm not mistaken. Surya has a question on Wipro, 500 shares. Is it good to buy at this juncture for the long term? That pretty much answers the question. We've got Peyton who's asking about DCM Shriram, and this is a longer term query. So Saurabh, coming to you on this one, would you buy for the long term?
Buy. If you look at the numbers, the quarter on quarter, the company is posting good growth, and it is a good growth. I would recommend a hold on to it.
All right, this one is, I believe, a Twitter query that we've got it from Sunmeet Singh, saying that he's holding Jubilant Pharma Nova at 750 rupees per share. He wants to know what's the outlook for the medium term and whether it makes sense to stay put in Jubilant Pharma Nova or should he look to switch. Saurabh, what's your take on this particular counter? What should Sunmeet do?
I think the financials look quite strong for the Jubilant Pharma Nova. I would recommend a hold on to it, seeing the prospects going down the line. I mean, it's a hold.
Kunal, we've got a question for you. Rajan's asking about Oil India. He wants to enter with a one, or rather, he says he wants to hold for a 1 to 2 year time horizon. He's asking what his entry level should be.
So yeah, from a longer term basis, I think this could, this could be a good starting point for you, where you are, if you're looking to enter the stock, because I think on the monthly charts as such, the stock has just confirmed a big breakout on the indicator fronts, and I'm talking of the momentum indicators. Whenever typically that happens, we could be looking at, a long term uptrend which shapes up into these names. But the question over here is on the short term basis, because what has happened is because of the last 3 months of intense rally into Oil India from 110, 120 levels to 170, 175 where it's trading, the RSIs have got back into an extremely overbought territories. So that's the point where you have to be a bit cautious from a short-term view. So I would suggest that you can start at current levels if you are in from a longer-term view, but then there purely basis on the short-term rally which you've seen the last 2 months for the stock. If you can try and take opportunity of those corrections and buy them at lower levels or average at lower levels, that could be a much better strategy for Oil India.
All right, this one is coming in from Megan Fernandez saying that she has 8,500 shares of Idea, which was purchased at 11 rupees for 94 rupees per share. Wants to know whether she should sell now or hold. Kunal, Vodafone Idea, does it actually make sense for anyone to look to invest in this particular counter? And since Megan already has a holding, what should she do?
Well, I think it's I would suggest an exit on Vodafone Idea. I don't sense any merit. The stock, is in an absolute range bound as such. It's not showing any kind of trend reversals or trend on the upside. In fact, one of the few sectors which has been an underperformer has been telecom stocks in the last 12-13 months of the rally as well. So there was a phase when the telecom stocks rallied significantly, but the last few months there has been a big underperformance, whether it's Bharti, Airtel, or whether it's Vodafone Idea. Those stocks have underperformed. So I would suggest that you should look to exit and come back to some good quality large cap names. I think there are a lot of banking stocks which are looking fairly attractive at current levels on the large cap side, and could probably hold potential for at least another 15 to 20% on the upside. So a lot of stability, a lot of durability into this sector, as well as a lot of opportunity which is still there in the large cap private sector max.
Okay, Saurabh, this one's for you since it's a long-term query, but I'll leave it up to you how you want to answer this. Nayan has gotten into Tata Teleservices at levels of 25. I'm not really sure what the buy price is, but he's asking whether to hold for the long term.
I won't recommend Tata Tele. They are into wholesale services now. They have summed up their business in the retail sector. The things are not going very well for this company, and I would rather stay avoid this company. If you want to invest, I think probably you can invest in the infrastructure sector or real estate sector. For example, in the infrastructure sector, the stock we like is J Kumar Infra, or maybe in the real estate you can bet upon Brigade Enterprises. I think a lot of money can be made if you invest for the long term.
Okay, this next query that we have is an email query from Shekhar Kadam, and he's saying he has United Spirits stocks, about 50 stocks, which is purchased at a price of 580 rupees per share. He wants to know, can I hold the stock or look to exit? Kunal, I know that previously you had a pretty positive view on United Spirits, but what should Mr. Shekhar do? He's purchased it at 580 rupees per share. That counter has seen a sharp up move from that level. So, but what should he do? Book profits or continue to hold?
Well, I would suggest to hold on to United Spirits, even though the viewer has made some good gains on the stock. I believe that the real potential of the stock is still yet to be unleashed. The long-term charts are very strong for United Spirits, and it's confirming a breakout of almost a 7-8 year consolidation. So in technical terms we call it as more of a spring coil pattern, where the stock has been consolidating and the range is getting narrower and narrower by every passing time, and such kind of breakouts, they augur extremely well from a longer term basis. So I would suggest a hold on United Spirits and hold on to it for at least another couple of years. I would sense if the breakout fructifies, you could be looking at a stock even hitting beyond that 800, 850 mark, which was the previous all-time high for the level.
Significant upside there. We've got one more question coming in. Rather, we have time for one more question, though we have more. Saurabh, this one's for you. Dikshita is asking about Banco products. It's a small cap, but it's had a tremendous run over the last year or so. It's up about 88%. Would you suggest a fresh entry at this juncture, though?
I would not suggest a fresh entry, but yes, this is a good auto ancillary companies, and auto ancillary companies are really doing well. I would, if you have invested, I would rather recommend keep on holding Banco products.
All right, with that we come to an end of the query segment with time for high risk and low risk ideas from our experts. And Kunal, I'll come first to you. What are your high risk and low risk ideas for our viewers today?
Well, to buy stocks, to buy calls, first is about Gujarat Gas. That stock looks attractive. It's confirming a very short-term breakout, but very pertinent kind of a breakout of a bullish flag and a triangular pattern consolidation. So buy with a target of 720 on Gujarat Gas. Stop loss could be kept at 655. The other stock which I discussed, which we discussed out of the show, that's SpiceJet. I think if the consolidation, is here to break out for the stock, then we could be looking at a very strong and a solid breakout for SpiceJet as well. So that's the other stock in radar. I would expect at least another 20 to 25 points on the upside from this breakout levels. Stop loss could be kept at 70 mark.
Coming to you, Saurabh, what are your ideas for our viewers today?
Both ideas would be low risk. First is from the auto ancillary segment, GNA Excels. The company is working the niche segment of the auto ancillary. If you look at the financials of the company has posted up a good show in the recent quarters. The net sales grew by approximately 70%, and there was a 500% kind of a jump in the bottom line. The company is doing extremely well in the markets of USA, Europe. The Class 8 truck orders have been coming in for the company. It's in. I mean, the growth in this sector, in the CV segment in the US market, is expected to grow at 4 to 5%. The company has a good market share in the USA market, and the scrappage policy in India is also expected to benefit this company. The second stock is from the infrastructure segment, is J. Kumar Infra. We are expecting approximately target of about 230. The company is in the infrastructure where they work in the railways, metros, and construction of roads and all. They have a good order book of about 10,000 crore. The company has given guidance of approximately 3,000 to 3,500 crore of revenue in this fiscal, with a margin band of 14 to 16%. The company is approximately net debt free. So I would recommend these stocks, GNA XL and J. Kumar Infra.
All right, that was the high risk and low risk ideas coming in from both of our experts. On that note, thank you, Kunal, as well as Saurabh, for joining us on Buy Now Sell Now, giving us your take on what's happening with the crude markets, who stand to benefit, as well as resolving queries, and lastly, giving us your ideas as well. And on that note, we slip into a break in this edition of Buy Now Sell Now. But stay tuned, more on the other side, so don't go anywhere.